Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Josh Cuzzy. Go by iChart Daily. Today is May 28th, 2025. In today's video, I wanted to go over a couple confirmations, setting alerts. I do see that the chart is breaking down on the 2-day, so I just want to let you know what I'm thinking. What am I doing? How you doing? So we're here. Bitcoin peaked at like 112,000. Great. I would like to see a nice healthy consolidation still. So we're here, right? 2-day chart. The reason why I say the 2-day chart is because I always try to find the time frame that doesn't lie to me and then bet with that one. So the 2-day, 1-day, 3-day, 4-day, those are like mid to long-term time frames where if you see bearish divergence playing out, it usually plays out and for a high percentage play, and you should follow it. You should not go against it. If you see a double bottom forming, like once again, market structure patterns or candlestick patterns, divergences, death crosses, golden crosses, they hold way more value on longer time frames. With Bitcoin's chart, the 2-day seems to be like the earliest of the mid time frames, excuse me, where it's like if you see a death cross, if you see the RSI breaking market structure, if you see the stochastic breaking market structure, if you see blah blah blah, everything I just told you, you should value that opinion. Once again, when this happened last time, Bitcoin fell from 106 to 91. Now, the last time this did happen, I've been telling a lot of people in the Discord and a lot of my close friends, it's not confirmed that the top is in. It's confirmed that the market is somewhat forming a top, right? Now, let me explain something to you guys. The most important thing I could really teach you is catching divergences, right? So it's like I am really good at seeing price action doing this or price action doing this, like just an upward slow trend or a sideways trend forming like a channel, like when it does something like this. But your indicators are showing you like the market is changing the other way, at least for the short time being. And you could see that now forming, right? We've gone from 74,000 up to 112,000. And the first thing I see is, we're seeing this liquidity grab right here. And we've done 1, 2, 3, 4 steps up. I'd like to see a nice healthy consolidation because that's what I see playing out in the charts, right? The first mover out of all the indicators is usually your stochastic and then your RSI. So when your stochastic is above your 80 line, you're bullish, right? And we've been bullish here. We were bullish here. We were bullish here. We were bullish here. We were bullish here. I didn't look at price action once. I'm going to double click right now. And we're going to look at what Bitcoin did at the circled positions, okay? So right here, Bitcoin went from 60 to 68. Right here, Bitcoin went from 60 to 65. Right here, Bitcoin went from 64 all the way to the break right here of 94. I'm looking for break of market structure, like when it broke down, right? Right here, we went above and broke down. Not much, right? Because you have to confluence it with these were in section B, okay? So your MACD and your RSI and stochastic, your other RSI, were all below the 0 line and the 50, showing that this was bearish market structure. This is still bullish because we're still above the histogram, still above the 50, but your stochastic broke down a couple days ago, and we didn't break 106, right? Another thing, we're breaking the 50 is this. The RSI. RSI was above the moving average all the way from April 25th. We made higher lows, higher highs, went from the 30 to the 74, right? Oversold, overbought. That's what I'm trying to teach you. And now your MACD wave is officially starting to look like it's about to come down. This is a 2-day chart, so you got, you could have a whole month of downward momentum on your MACD, and eventually we still go flat. My point is you should start looking for more breaks in the ice, like the 3-day, the 4-day, the 5-day. And if we see the 4, 5, and weekly start to form the same things that I just showed you, MACD coming down, RSI breaking moving average and going, and has room to bleed, your stochastic is breaking down, right? Because right now your weekly looks like this. Okay, we're still pointing up. This looks like it's coming down. This looks like it's about to death cross. All right. So unfortunately, you can't bet with the weekly because it takes a whole week to print one candle. So that's why you have to confluence it with multiple time frame charts. Right. So your daily is breaking down now. Right. Your stochastic is below the 20 line, bearish. Right now, we broke this upward support line. Your first support is going to be 106.596. From here on out, we could form something flat, right? Right here to something right here, right? This was your last resistance turned into support, this 106.5 level, let's just say, and we could continue going sideways. Now, as we go sideways, and this chart continues to break down, break down, break down, break down, then the 3-day breaks down, right? Look at the 3-day RSI. Stochastic is still above the 80, right? So you have to watch the 2-day. Next candle prints 8 hours and 37 minutes. I'm watching the breakdown. Once the next candle prints, I want to see if we break the 106.5. Okay, that's what I'm curious to see. I'd probably put on the 11 and 21. Yeah, okay. So once we break the 106, this level here where you're seeing your wicks, 106.918, you're going to go to your 21-day moving average or your next liquidity zone of here, right? 101.832. Now, I am a swing trader. I like to find the swing high, swing low, and then catch the momentum on the way down. So what I was seeing, right, is right here. All right, and once again, it's never perfect, but you can clearly see it's like bounce 1, bounce 2, bounce 3. Now we come up here. And like I said in my last video, there's a high probability we come down to 91 and then come back up. Calling the market top has to confluence with the monthly chart. For me to confidently say that we're officially forming a top, everything that I just told you on the 2-day needs to play out on the monthly. It's the same lingo, cuzzies. It's just what time is it playing out on? If it's playing out on a 4-hour chart, but your weekly is still doing bullish market structure, you could have just a consolidation. If you're having it on a 4-hour chart and your weekly looks like it's about to do the same thing, like a death cross, RSI is breaking below 50, below moving average, stochastics below 50, then you're in really poop territory, right? We're not there yet, right? So you can see here market structure, market structure, market structure change. Bitcoin went from 77 to 58,000 and lower highs, lower lows each time until it changed the other way. So, is it a double top? Possibly. Could it form a higher low? Possibly. Could it form a higher low, come back up, break 110, and then head to 130 into next year? Possibly. As of right now, it has a high probability of coming down. Coming down to your major liquidity zone of 92 to potentially 89,000, which was your last lows here, your last highs here, and like I said in the last video, that would form a higher low, giving everyone hope that we could come back up and break the 110 to 112 and then potentially form a like an ascending triangle to the 120 something level over here. Once again, you have to play devil's advocate. You have to see if you're forming wicks at 92 to 80. From 92 to 89,000. If that's the case, and that's a great sign because we did make a little bit of a higher high. We're making a big higher low. What I mean by that is your last lows were here, right? Your last lows were here from 75 to 81,000. Previous to that was here from 55 to 50,000, right? Previous to that, previous to that, previous to that, previous to that. Bear market starts when we make our first same low, and then your 2-week, 3-week, and monthly are forming the same divergences that the 2-day are forming now, right? Like this. Okay, if you start seeing your monthly MACD look like this, your monthly RSI look like this, and your monthly stochastic look like this, we're in for a long, bloody ride ahead of us. And that's market structure, right? You have to realize like when the happening is, when it's a four-year cycle, right? Let's just break it down, right? So right here, right, you got May, right here, you got May, right here, you got May, right, right here, you got May, okay? So the the right way to look at this is like, well, how long until it topped? How long until it topped? How long until it topped, right? And you can see here, this was 579 days. This was 579 days. This was, oops, sorry, 518 days. And this right now is about 365 days, right? So if I was to look at the trend, right, the first one was 335 days, 365 days till the red candle, and we're right here. So is it possible for us to come back down and then go back up a little bit to the 106 to the 120? Let's just say right here, you know, middle 2000, what is that? The end of 2025. Possible. You know, I want to leave that on the table because once again, it's not my opinion, bro. Like you can't be happy when something goes up. You can't be sad when something goes down. You have to be happy when you're right. You have to be sad when you're wrong. That's just the way it is because you could open up a short and still be happy if the market goes down. You can open up a long and still be happy if the market goes up, right? But that's the video. I love you guys. Let's go over some key areas I would love to set some alerts at. So 106,617, have to set an alert there. Right click on your MACD, right? You want to make sure you can set an alert on your MACD crossing your MACD signal. Create stochastic. You would want to make sure I would set an alert at like the 47. You want to make sure the K and the D are both below the 50, heading towards the 20, and then I would set an alert at the 21 level around here to notify me when it's below the 20. Once again, best time to buy is when it's above the 50, heading towards the 80 and above. Best time to short, let's just say, is when it's heading from the 50 to the 20 and below the 20. But that's the video. As of right now, market structure looks like it's changing. It looks like this was just a fake out liquidity grab, and curious to see if we come all the way back down to 92 to 93,000, and then a wick maybe to 88,000. Love you guys.